Hello, everyone, and I hope that you are well. I hope that you've all had a great weekend. So we're back with another outlook. So let's go over obviously what happened last week and if anything has changed. So let's start off with AU as usual. So on the daily, as you can see, this POI is completely been taken out. We did have somewhat of a reaction, but it didn't follow through as such. Yeah, a small reaction, but it continued to go bullish from that 4 hour. Again, as mentioned, even last week I mentioned in terms of going bullish. Is this the case that if you were to see like a bullish change wherever it was, I don't know, somewhere here or somewhere here, I mean, you would have been taken out here on that one. But say you caught this one, for example, and you aim to either take out this high or take out a small position here and then see if it does hold. That's the benefit of doing that, and this is a good example. So now that daily POI, because that's been taken out, we can get rid of all of that. And essentially we need to wait for that POI to close, but now we've got this daily bullish POI, and this also follows that 4 hour order flow, because now we have this mitigation here, which now gives us bullish order flow. You're better off, to be fair, using, oh, no, that one. You're better off going on to refine. So you can refine it down. Oops. Sorry. You can refine it to this candle here if you wanted to. Alternatively, you could refine it to the wick trick, or you can even refine it to this wick here. The reason why I'm saying this wick here is purely because if you think about what's happening within this candle is the fact that they have selling pressure before that buy, which ended up leading to that breaker structure. So for me, there's an OB within there. You could probably find that, yeah, there we go. There's an hourly. There's an hourly OB within that as a refinement. Thing is, if you ever get a wick like this, just be sure that you look back just to make sure you can clarify that it makes sense to you. For me, I've seen wicks and charts like this for so long that I know that what's happening within this wick already. It was just by chance that it happened to be that hourly OB, to be fair, but just make sure you understand the reasoning why. Just understand, essentially, you need to see that when you see a huge wick like this, you know there is aggressive buying rather than any sell volume within here. So that this is where the pressure has happened. So for me, that's a clear OB clear POI to use from there. There's nothing further really on this one. I mean, because it's taken off, obviously taken out that daily POI, so this intent didn't obviously hold. So price is still going to continue to go bullish. Let's go on GJ. So GJ is in the POI from last week, so I don't really need to explain much on this. He hasn't really changed as such. This is the POI we couldn't really refine, so we just have to wait for a reason to go short. Apart from that, nothing further we need to do apart from obviously targets. We've got obviously this low to take out, and then I don't think there's anything more target wise. I'm assuming was that last week. Yeah, we got last. Well, not even last week. That's September. Let's go 1 month. I mean, yeah, I can't think of anything else for a long-term target. I think just aim for that daily low. That should be enough, and then from there you can decide what you want to do after that. I think I mentioned targets on the last outlook, so be sure to watch that one. I don't need to reiterate myself in that case, but in terms of how I used to do targets, I definitely explained that in terms of I don't really aim for these big long-term lows purely because I didn't feel it was worth it in terms of charges. But in terms of GJ, the position and bias, it doesn't really change, so there's no need for me to explain that one. So GU, so this POI is from my outlook that I drew, so I took the long from here to aiming for this POI, but obviously I was taken out on that break even from there. But what we have is a bearish break here, and then we have bearish 2 rules, but now we've got bullish intent. We need to wait for this to be confirmed. Once that is confirmed, we do have a potential bullish POI to continue higher. Let's just check the 4 hour and see if there's anything clear there. I mean, with the 4 hour perspective, what's happened is that we've continued to go bearish, but now we've got this bullish intent. So we've got this bullish POI to continue potentially going up to this daily POI here, which would then fit that narrative of continuing that whole bullish trend that we have on that daily. And this whole bearish take was already taken out. However, bear in mind this is only bullish intent, so it doesn't necessarily need to hold. We are in favor of shorts, but we just got no reason to go short at this very moment. as in we're not in any POI. However, bear in mind, if you do catch obviously a lower time frame trade here, for example, you can be aiming to either take out this low or aim to monitor the reaction and see what happens from there. If it was me personally, I would aim to take out obviously my partial at that 10 pip range, and then aim to take out that low, and whatever happens from there, I'm happy to take a break even if price does continue. Most likely, if there's price does come into here and say it's not within my session, and see what happens, then I come next morning and see that, and I see that if there's a long potential, I would take that and hold this trade and just hedge that both out. It's completely up to you how you want to manage that, but I wouldn't change a session. I wouldn't change my sessions based on that, which is the reason why I stopped trading the high time frames, purely because I like to control when I trade myself. But that's what works for me. You need to find what you're comfortable doing from there. EG. Oh gosh, yeah. I don't really need to say much from this one, to be fair. It's a horrible pair. Forget it. I'm not analysing that. Forget that. Nothing's changed really from last week, apart from obviously that bullish move on EG. Sorry. Let's get rid of that. Okay, so daily on EU. So we're in this bullish range at the moment. So we've got from this range low to this range high. Price to react to something within here to continue. This is the POI that I mentioned last week, something within here. So now we're continuing to aim to take out that high. So basically what's going to happen is if price goes out, take out that high, we've got that new daily POI, and that's got obviously daily order flow following that mitigation. So I mean, that's pretty clear. There's nothing further to really add on to that. If we're going to continue, I mean, I don't expect it to have this retrace before taking out that daily high, but I guess we've got this this is same as AU. Yeah, same as AU. We've got POI here to continue, and that's probably that refinement. That will be that refinement if price goes out to if price goes out to take out this daily high, then this will be a refinement of that daily POI to continue higher. I don't expect a retrace right now. I mean, but thing is, if it does happen, at least we'll be ready, because it still makes sense on the 4 hour to do so. And that just means it'll give us another POI for the daily if it does eventually go to break. But it looks like it's heading that way before even retracing. Apart from that, there's nothing more I need to mention, I suppose. It's a pretty clear, which is why I think I mentioned last week I don't need to do this every week, because not much changes as such on a weekly basis. But I guess the major change was obviously AU in terms of taking out that daily POI. Apart from that, as I said, there's nothing further that I need to grasp. What I mentioned in my most recent breakdown that I posted this morning, this morning, that I posted this morning, not long ago, essentially is understanding your targets. What I've noticed is a lot of you would be, for example, say this is your trading range from this low to this high, you end up getting an entry here, and then say that price goes out, take out this high, and say this is your M1. Okay, say that's your base time frame, for example. Price goes out, take out that high. This high, okay, this is the range that you're trading. Once it takes out that high, that is your minimum target, and that's the trade one. Regardless of whether the risk to reward is good for you, or regardless of whether the fact that you take partial or not, that is a winning trade, and that's the model that's the winning model essentially. However, if your trade management doesn't allow you to either take your partial here or move your stop loss to break even, and then price comes back and either takes you out break even or takes you out at stop loss, if that loses, this trade is not necessarily a loss in terms of the setup itself. What has lost you is your trade management in that case. And I think there is a clear there's a clear lack of appreciation for the model itself. You need to understand what the winning models are and what's the minimum targets. If price reaches the minimum target, it is a winning model. And what would help is obviously if you mention that on your journals, wherever you're documenting, whatever it is, rather than putting loss, you need to look back and see that if it's reaching the minimum target, you are hitting the minimum target regardless. that should be a confidence boost. The fact that you are doing everything correct, you're just not happy with the risk to reward, and you might find like a mean risk to reward that happens quite frequently for you specifically. For some people it could be about 4 or 5 R, which is completely fine. But if you acknowledge it and appreciate it, you can probably change your risk management to allow to take partials or allow to take profit within that. And you should notice that difference. But if you want managing your trade, I'm not going to say correctly because that's not the word. There's no correct way of really managing a trade. It's a unique experience and unique decision that you need to do. But if you aren't managing a trade effectively, that's the word. If you aren't managing it effectively, then and you're constantly taking losses, you need to look back and think, what are you doing? So in terms of when you are journaling your trades, make sure you add whether the trade has hit your minimum target or not, and then understand whether you need to adjust your trade management. Or some of you could be just happy, obviously with your trade management. If you're happy, then don't change it. But if you're noticing that the losses are getting to you, but you realize that you are hitting the minimum targets, you may need to address your trade management. I see it all the time within the group, and I can only say it so much, and I've stopped saying it to some of you guys because if you're not listening, then I can't do anything further than that. But as long as you understand, and consent to the losses that you're taking because of your trade management, you're completely fine. There's nothing more that I can do, nothing more that you can do if that's what you're comfortable with. I know personally of myself, I would be comfortable taking that many losses if the trade is meeting the minimum targets regardless. And I think it does come back down to what I discussed last week in terms of account size. Like for example, for me on my account size, a few artists, for me that's fine. It's monetary wise and the risk reward wise, it's perfectly fine. However, I completely understand that on a smaller account, the monetary gains may not be much at first. However, you need to understand there is a compound value to it, and if you're doing it over the year consistently, not even that, over time consistently, you will see the numbers add up. It just seems like a slower process because you aren't seeing the monetary gains. But again, that's when you also need to appreciate the capital that's in your account. I'm trying to say that I completely understand why some of you would be doing it, but think about the long term. It's not about the short term gains at all. I know I say this a lot, but I'm trying to reiterate the fact that the monetary gains doesn't necessarily show whether you're successful at trading or not, or whether you're good or not. Just because you've got a smaller account, you could be hitting higher percentage, higher risk to reward, higher strike rate, and still not making more than anyone with a bigger account with a smaller win rate, with a smaller win rate. It doesn't seem like if you've got a smaller account and comparing to someone with a big account, it doesn't necessarily make sense because there's no direct relationship, and you shouldn't be comparing to anyone else anyway. But I'm just trying to say that if you're on a smaller account, just appreciate the results in terms of the risk to reward gain or the percentage gain as opposed to the monetary value. That will come later. Work on getting consistent and work on seeing those percentage gains, and then the funding funding and capital will come later on when you feel ready to do so. Apart from that, there's nothing further I need to discuss, I suppose. I hope you all have a safe trading week. In terms of the content, I know there's a few DMs. As I said, please, if you're in the mentorship, please use the ticket system for all DMs. I'm not going to respond to any DMs from now on. I explained this at the end of last year. It's just easier for me to manage and easier for me to decipher who's in the mentorship and who's not, who's in the course program or the access program. It just makes things easier. But in terms of the updated course content, phase 2 is essentially complete. Phase 3 is pretty much complete. However, I'm just waiting for phase 1 to be fully watched and understood and see. I'm just assessing the feedback that I'm getting, which I guess I have to say thank you obviously for the feedback so far. I'm just trying to release it in a way that it can be the most effective. and I'm just obviously need to edit some of the videos just to make sure they all make sense, because I know it's not much different in terms of rules. Some of you have found new nuggets of information from the structure rules and from phase one and from the two videos in phase one. The rule set's not going to change. Nothing has changed. It's just, I suppose, it's just a clearer way of teaching, taking away any of the waffle that was there prior to the new additions. So hopefully, obviously, it makes things clearer for you. But I will be releasing them soon. It just give me some time to organize all of that. Apart from that, again, I think I said it a few times now. Have a safe trading week. Trade safe, and stick to the rules. Apart from that, take care.